All right, let's get right into this explainer. We're looking at the raw hard data connecting the Asian market close directly to our tactical game plan for the US Open. This isn't just your standard overnight recap. It's literally a leading indicator. When we see extreme, outlier data points coming out of Asia, they essentially act as a crystal ball for US tech and semiconductor positioning. So let's break down the massive, glaring signals the market is flashing at us today. Get this. Overnight, Korean April ICT exports printed a staggering, absolute record-breaking increase of 125.9% year over year. I mean, just think about the sheer scale of that jump for a second. This isn't just some gradual, slow and steady recovery. It's a massive structural shift. It completely redefines the short-term supply chain narrative and, quite frankly, demands an immediate market reaction. And boy, did we see that exact reaction play out right away. This explosive export data provided the perfect fundamental spark for heavy institutional buying, actually driving the KOSPI to an all-time high, closing up 1.75%. When the big institutional players see semiconductor exports blowing past the $30 billion mark for the second month in a row, well, they have all the justification they need to push the index straight into record territory. But hold on a second. If we peek right beneath the surface, at the sector internals, a really fascinating divergence starts to appear. While the headline index was out there hitting an all-time high, foreign investors actually used this exact data confirmation as cover. They used it to distribute and lock in their profits right at the peak. It's a classic, highly tactical move, right? Offloading positions into the strength of great macroeconomic news without completely crushing the market price. Now, this all-time high didn't just happen in a vacuum. Let's trace the causal path that actually got us here. It started yesterday with step one, stable U.S. PCE inflation components stepping in to block any real panic after that PPI print, which kept risk appetite totally alive. Then came step two, a massive AI earnings beat from Cisco, and that ultimately triggered step three, those record Korean ICT exports we just talked about, validating the entire chain. Zooming in on step two for a moment, right after the U.S. close, Cisco reported a massive $5.3 billion beat specifically in AI data center orders. The market reaction? Absolutely explosive. Shares surged 18% in after-hours trading. This structurally confirms that the whole AI infrastructure investment cycle isn't just some flashy buzzword. It's an accelerating, on-the-ground reality backed by hard, cold corporate cash. And that U.S. signal instantly sent shockwaves straight through Asia. Just look at how these metrics compound. Cisco's $5.3 billion in AI orders feeds directly into the Korean memory supply chains. Solid-state drive exports to the United States skyrocketed an unbelievable 1,638%. Plus, DRAM spot prices jumped 23% month over month. The bridge linking U.S. demand over to Asian supply is completely rock solid right now. So what's the really crucial takeaway here? It's what actually happened during that index distribution we noted earlier. Under the hood of that surface-level selling, a massive relative value rotation occurred strictly within the AI memory sector itself. We literally saw SK Hynix aggressively sold off, while that capital aggressively rotated directly over into Samsung Electronics. The numbers reveal what I'd call a surgical swap. Foreign investors dumped $1.08 billion of SK Hynix, which actually represented over 74% of their total net selling for the entire session. But simultaneously, they established pure net buying in Samsung. So they weren't de-risking, they weren't abandoning the AI theme at all. They were just actively, tactically rotating their exposure between the two biggest players on the board. And the closing prices perfectly reflect this strategic pivot. SK Hynix absorbed all that massive selling pressure to close down only slightly at minus 0.30%, while Samsung surged over 4%. This cross-stock divergence really is all the proof we need. The broader AI memory theme remains fundamentally valid. It's being driven by relative value, definitely not a market retreat. Okay, let's pivot and shift gears to our tactical execution plan for the U.S. session. The VIX Volatility Index currently stands at 17.82. Because it's sitting safely below our critical threshold of 20, which generally indicates manageable market fear, this keeps us right in our normal operating mode. We only need to flip the switch to strict capital preservation mode if volatility breaches that 20 level.
Now, let's map out the exact execution levels for our primary U.S. proxy, the NQM26 NASDAQ futures. To manage our risk effectively today, we have to be prepared for literally anything, both upside continuation and sudden sharp reversals. So here are the precise pivot points you need to be watching like a hawk as the opening bell rings. First up, the bullish outlook. If the NQM26 manages to hold above the 29,500 pivot relative to the previous close, the strategy is pretty straightforward. Maintain those conditional longs in semiconductors and AI infrastructure. As long as this floor firmly holds, our thesis of continued tech strength is entirely intact. However, you absolutely have to watch out for the bearish trap. If the NQM26 breaks below 29,300 and the VIX simultaneously spikes above 20, well, the thesis is broken. If you see this specific combination hit the screen, it's time to liquidate long positions immediately. Don't be a hero trying to catch a falling knife. You've got to respect the regime change. For the SOX Semiconductor Index, which is essentially our U.S. proxy for validating that massive Samsung rotation we saw over in Asia, holding above the 12,000 support level is non-negotiable. If it holds, the rotation thesis is alive and well. But if it breaches below 12,000, we stop, we take a step back, and we seriously reassess our logic before touching any memory trades. To confirm this entire U.S. session strategy, we've got a really strict macro checklist to clear today. First up on the list, U.S. April retail sales. We are closely watching for that 0.5% consensus. If it meets it, our tech support thesis strengthens. But if it misses by more than 0.5%, consider that a glaring signal to reduce your position sizing, because broad economic consumer demand might actually be faltering.
Next up on the checklist, initial jobless claims. The consensus right now sits at 205K. If we see those claims blow past 215K, alongside rising import prices, that seriously threatens the PCE inflation stability argument we were relying on earlier. It would instantly reclassify our environment from stable to an emerging growth deceleration concern. Also, we have got to listen closely for any hawkish signals from Fed officials Hymix, Williams, or Barr today. Following that recent, unexpectedly hot PPI print, the risk of hawkish rhetoric is highly elevated. If any of them hint at additional tightening and the U.S. 10-year yield crosses that 4.5% line, our entire bullish scenario basically gets thrown right out the window. Finally, the ultimate test for today. Applied Materials, or AMAT, the major semiconductor equipment manufacturer, reports their earnings right after the close. This is going to serve as the major structural inflection point for the entire equipment cycle. It's either going to perfectly validate the massive demand implied by Cisco's numbers, or it's going to expose a critical, glaring vulnerability in the supply chain narrative. So we are really left waiting on a knife's edge here. Will AMAT's guidance confirm Cisco's demand validation, or is it going to disappoint and trigger a much broader outflow trap? Foreign investors have actually already shown signs of preemptive hedging in Korean equipment names, so now we wait for AMAT's data to either confirm those underlying fears or completely ignite the next leg of this rally. As the opening bell approaches, the board is officially set. We've tracked the capital flow all the way from record Asian exports directly to our specific U.S. execution levels. The ultimate question you have to ask yourself now is, are we just seeing a temporary rebalancing act, or is this the absolute ground floor of a completely redefined, multi-year AI infrastructure supercycle? Keep your eyes glued to those pivot points today. And hey, to get this raw intelligence straight from the Asian close before the New York bell even rings, make sure you're subscribed to these explainers. See you next time.